What is going on, guys? Happy 2023. I know I made days late, but we still here. I'm finally putting together this video to answer a bunch of regular basic questions that I still get asked up to this day about the Forex market, right? So I'm just gonna go ahead and start sharing my screen. I do have a 32-inch monitor on my right hand side, so don't mind me. I'll be looking this way most of the video, but we're gonna dive right into it. Before we do that, I do want to let you guys know that I do have a special offer for you guys at the end of this video, so stay tuned, all right? What is Forex? Forex is the foreign exchange market. It is usually which is usually known as FX or Forex. It's a global financial market that allows anyone to trade currencies. So if you've ever traveled to another country, right? Usually you have to change the currency at the airport from the currency in your wallet to the currency of the country that you're visiting. When you're at the desk, you usually see a screen displaying different exchange rates for different currencies. When you see two currencies from two different countries with a relative price, and that is the exchange rate. That is what's being traded in Forex. That is what you're betting on when you're trading. Moving forward, it is a global decentralized market, meaning that, not one company, business, company, entity, system, whatever is moving or shifting the market. It's all decentralized now. Nobody controls it. To put things in perspective, the New York Stock Exchange is $22.4 billion a day market, and the Forex market is a $6.6 trillion a day market. So a lot more volume is going on in the Forex market compared to the New York Stock Exchange, which also makes it the most liquid market in the world. Traders can profit whether a specific currency is increasing or decreasing in value. So if the market is going up, you can make money. You could potentially make money. If the market is going down, you can also potentially make money. The forex market is open 24 hours a day and 5 days a week. Who participates in the forex market? So it's not just retail traders like myself. It's also a bunch of big players like here that you see on the screen. So you got your you got your commercial and investment banks, you got your central banks, you got your investment managers, hedge funds, and then multinational corporations. So it's not just, like I said, it's not just retail traders. It's definitely people playing at a higher level with a lot more capital in the market. Of course, because it is a $6.6 trillion a day market. What is traded in Forex? In basic terms, it's money. Comparing it to buying shares in a company, essentially what we're doing is buying shares in a particular country. How is price of a currency determined? Price is usually a direct reflection of the market's opinion on the current and future health of its respective economy. Conditions of the country's economy is compared to other economies to determine the exchange rate. So when you got so you we got major currencies, right? Major currencies are the most heavily traded currencies and represent some of the world's largest economy. Of course, you got the United States with the US dollar, you got the Eurozone with the euro, you got the Japanese yen, the Great Britain pound, the Switzerland franc, the Canadian dollar, the Australian dollar, and then you also got the New Zealand dollar. When it comes to buying and selling currency pairs, currencies are traded through a forex broker and are traded in pairs. So, for example, you're not just trading the US dollar, right? If you're trading the euro and the US dollar, you would look up on your forex broker EUR USD. If you're trading the Britain pound with the and the Japanese yen, you're looking up the GBP JPY and trading it as that currency pair. When trading in the forex market, you are buying or selling in currency pairs. What I just explained. Exchange rates fluctuate based on which currency is stronger at the moment. Major currencies always include the US dollar. So these are great beginner pairs to start trading if you want to, if you want to know which ones you should start trading. Anything that has the US dollar is a great pair to start trading. So you got EUR USD, USD JPY, GBP USD, USD CHF, USD CAD, AUD USD, and then you also have NZD USD. So how to make money how to make money trading forex. The objective of trading is to exchange one currency for another in expectation that the price will change, right? So the supply and demand for a currency changes due to various economic factors, which drives currency exchange rates up and down, right? So what creates supply and demand? Basically, forex fundamentals analysis focuses on the overall state of the country's economy, such as productivity, employment, manufacturing, international trade, and interest rates. So all of that plays a part in creating supply and demand in the market for each currency pair. For each currency pair, yeah. When it comes to trading, we trade in lot sizes, right? So when you go to a grocery store and you want to trade it, and you want to trade an egg, nah, you want to buy an egg, right? You can't just buy one single egg. They come in dozens or lot sizes of 12 or lots of 12, right? So it's the same thing with the forex market. You can't just, you're not just buying €1. They also come in lots of 1,000, 10,000, or 100,000, depending on your broker and the type of account that you have. So just looking at this little chart right here, what's the value of each pip considering the lot sizes that you decide to use. So if you're using a 1.0 lot size, each pip equals $10. If you're using a 0.10 lot size, each pip equals $1. Or you can use a zero point zero 0.01, which equals one pip equals 10 cents. So that's just to give you an idea. Of course, I can dive a lot more deeper into this in the mentorships that I do provide. But here we got the types of forex orders. So an order is placed through your chosen broker to open and close a transaction if the instructions specified by you are satisfied. So nobody's going to press buy or sell. Nobody's going to tell you to press buy or sell, but everything is always going to be depending on you. All right. You have two types of orders. You got market order, which is an order instantly executed where price is currently at. So the minute you press buy, that's the price you're getting in at. The minute you press sell, that's the price that you're getting in at. Then you have also pending orders. An order to be set and executed at a later time at the price you set it for specifically. So just to break this down real quick, a buy stop is a order placed above price and price keeps going up. So, you set a buy stop order, then let's just say, if price is where the blue dot is at and you set a buy stop where the green line is at, basically what you're saying is that, once price crosses that green line, you want it to go ahead and get you in the market as soon as it does that. Buy limit is an order placed below price and price then goes up. So if you just want price to come down a little bit more, then you'll go ahead and you still want to buy and whatever. If you want to go to sleep, you want it to do it for you automatically. You'll set a buy limit. So let's just say price is where the blue dot is at. You set your buy limit where the green line is at. Once price does reaches that and touches it, it'll get you in the market automatically. And what you're expecting is the market to continue going up. So what I just explained there is the buy stop and buy limit, but for sell stop and sell limit is the complete opposite of it. So you can see it in the diagram. Sell stop orders. Sell stop is an order placed below price and price keeps going down. A sell limit is an order placed above price and price then goes down. So you got stop loss. Stop loss is what I always recommend using when you're trading. It protects the rest of your capital that you're not willing to risk. So, if your stop loss gets hit, then you would automatically get taken out by the market. And again, you're protecting. You want to protect your capital as much as possible. So you got forex trading sessions, right? You have four sessions when it comes to trading. You have your Sydney session, you have your Tokyo session, you have your London session, and then you have your New York session. So I'm on the East Coast. So if you're looking at the EST right in the middle of the chart, you can see each at what time each session starts and ends at. Right. So the most traded the most traded session is the London session, which is at 3 a.m. on the East Coast and ends at 11 a.m. But also after that, it is also the New York session, which is starting at 8 a.m. Finishing up at 5 a.m. I mean 5 p.m. Sorry, but just to put things in perspective to show you why London session is the most traded session. You can see average pip movement of major currency pairs during each forex trading session. So this is the average of how many pips moves during each session. EUR USD during London session is an average of 114 pips. GBP USD moves an average of 127 pips during London session. USD JPY moves an average of 66 pips during London session. AUD USD 83 pips. NZD USD 72 pips. USD CAD 96 pips. And then you also have GBP JPY. It's not a major pair, but it's very volatile and moves very fast. So during London session, it does move a lot more than most of these, making it more volatile. And again, if your eyes aren't trained in the market to adapt quickly, then you can also get taken out pretty fast. So again, if you're starting off, I definitely recommend trading any of these pairs that you see with the US dollar in it, and then moving your way up to faster pairs soon as you get better at trading these pairs. But this was just some basic information that I think is very helpful for anybody that doesn't know anything about this forex market, right? So if you guys want, I do have a forex fortunes guide available in the description below. So that is an easy read ebook that goes ahead and breaks down the mindset of a trader, right? Gives you it prepares you for, what you're going to expect, how to approach the market, the mindset of a trader. And like I said, a bunch of 10 chapters, a bunch of good information there before you even just start diving too deep into this market. So I'm gonna go ahead and give you guys 20% off on that. I'll go ahead and leave the code below so you guys can use it when you guys check out. So grab that and stay tuned. I do have a lot more coming out this year with adding my style to help anybody out that wants to learn how to trade. So it was again, appreciate you guys staying tuning in, whatever. I am mixing up my words a little bit too much here, so I'm logging off before I say too much. All right. Thank you guys for watching again.